Setting the stage, understanding pre-money valuation. In the world of startups, where innovation meets opportunity, a clear understanding of financial matters is paramount. One such critical concept is pre-money valuation, a term that often sparks curiosity and at times confusion. Simply put, pre-money valuation is the value assigned to a company before it receives its next round of investment. Imagine a house before renovation. Its pre-renovation value is its pre-money valuation. This valuation is not just a number. It's the foundation upon which investment decisions are made, directly impacting the equity stake investors receive and the dilution founders may experience. A well-defined pre-money valuation is essential for both entrepreneurs seeking funding and investors looking to put their capital to work. It sets the stage for a fair and transparent investment process, ensuring that both parties are aligned on the company's worth. In essence, it's about finding common ground, a shared understanding of the company's potential and the value it brings to the table. This understanding forms the bedrock of a successful investor-startup relationship. However, navigating the complexities of pre-money valuation can be daunting. This is where FFA Ventures steps in, providing expert guidance and support to startups and investors alike. Our team of experienced professionals understands the intricacies of valuation and employs a data-driven approach to determine a company's true worth. We believe that a thorough understanding of pre-money valuation is not just beneficial, it's crucial for informed decision-making in the fast-paced world of startups. A two-way street benefits for both sides of the table. Accurate pre-money valuation is not a one-sided advantage. It benefits both investors and entrepreneurs. For entrepreneurs, a realistic valuation helps attract the right investors, those who share their vision and are willing to invest at a fair price. It also ensures that founders retain a significant ownership stake in their company, allowing them to maintain control and benefit from future growth. In essence, a fair valuation empowers entrepreneurs to build their businesses with confidence, knowing that they have secured funding on favorable terms. On the flip side, investors benefit from a well-defined valuation by ensuring they are investing at the right price for the level of risk involved. A well-researched valuation helps investors make informed decisions about their portfolio allocation, maximizing their potential returns while minimizing their exposure to risk. It's about striking a balance, finding companies with high growth potential while ensuring that the investment aligns with their overall investment strategy. FFA Ventures, your guide in the valuation maze. At FFA Ventures, we understand that pre-money valuation can be a complex and often overwhelming process for entrepreneurs. That's why we've positioned ourselves as partners, not just investors. Our team of experienced professionals works closely with startups, guiding them through each step of the valuation process. We bring our expertise to the table, helping entrepreneurs understand the key factors that influence valuation and providing them with the tools and resources they need to present a compelling case to potential investors. Our commitment to transparency and collaboration sets us apart. We believe in open communication and work closely with entrepreneurs to ensure they fully understand our valuation methodology. We don't just provide a number, we explain the rationale behind it, fostering trust and building long-lasting relationships with the companies we invest in. At FFA Ventures, we view ourselves as an extension of the startup team, working together to achieve shared goals. Unpacking the toolkit methods for accurate valuation. Determining a startup's pre-money valuation is not an exact science. It's a nuanced process that involves a blend of art and science. Various methods can be employed, each with its own strengths and limitations. Two commonly used methods are the Berkus method and the scorecard method. The Berkus method, developed by angel investor Dave Berkus, focuses on 5 key factors: sound idea, prototype development, quality management team, strategic relationships, and sales traction. Each factor is assigned a financial value, with a maximum valuation of $2.5 million. The scorecard method, on the other hand, compares the target company to similar companies that have recently received funding. This method considers factors such as market size, management team experience, competitive landscape, and technology innovation. Weights are assigned to each factor based on its importance, and the target company's score is compared to the benchmark companies to arrive at a valuation. A startup success story, valuation in action. Let's take a look at a real-world example to illustrate how pre-money valuation works in practice. Imagine a promising tech startup, Innovate Tech, developing cutting-edge artificial intelligence software. Innovate Tech has a strong management team, a working prototype, and early signs of traction with pilot customers. Using a combination of the Burkus method and the scorecard method, FFA Ventures determines Innovate Tech's pre-money valuation to be $5 million a year. Reaping the rewards, the power of a well-defined value. An accurate pre-money valuation provides businesses with numerous benefits. Firstly, it gives them a strong negotiating position with investors. Armed with a well-researched valuation, businesses are able to confidently communicate their company's worth and secure funding on favorable terms. Secondly, the valuation process helps businesses identify their company's strengths and weaknesses, providing valuable insights that informs their business strategy. For FFA Ventures, investments in businesses proves to be of a wise decision process. The company's innovative technology and strong market position leads to rapid growth, generating significant returns for FFA Ventures and its investors. This successful outcome highlights the importance of a robust valuation framework in identifying promising startups. FFA's Blueprint, building a robust valuation framework. FFA Ventures has developed a robust valuation framework that combines industry best practices with our own proprietary insights. Our framework is designed to be comprehensive, considering both quantitative and qualitative factors. We believe that a holistic approach to valuation is essential for capturing the full potential of early-stage companies. Our framework is constantly evolving, incorporating the latest market trends and technological advancements. A key element of our approach is our commitment to ongoing due diligence. We don't just rely on historical data, we actively monitor the progress of our portfolio companies, tracking their performance against key metrics and adjusting our valuation accordingly. This dynamic approach allows us to stay ahead of the curve, identifying potential risks and opportunities as they arise. Beyond the individual impact on the startup ecosystem, the impact of accurate pre-money valuations extends far beyond individual startups and investors. A well-functioning valuation process is crucial for the health and growth of the entire startup ecosystem. When startups are valued fairly, it instills confidence in investors, encouraging them to deploy more capital into the ecosystem. This, in turn, fuels innovation and economic growth, creating jobs and driving technological advancements. Conversely, inaccurate or inflated valuations can have detrimental effects. When startups are overvalued, it can lead to a disconnect between expectations and reality. This can result in down rounds where companies are forced to raise capital at a lower valuation than their previous round, which can damage investor confidence and harm the reputation of the entire ecosystem. The human element, transparency and trust in valuation. While data and analytics are essential components of pre-money valuation, it's important to remember the human element. Valuation is not just about numbers, it's about people. Entrepreneurs with a vision and investors willing to take a chance on that vision. Building strong relationships based on transparency and trust is paramount. Open communication between founders and investors is crucial throughout the valuation process. Founders should be prepared to articulate their company's value proposition clearly and address any concerns that investors may have. Investors, in turn, should be transparent about their valuation methodology and provide constructive feedback to entrepreneurs. Charting the future pre-money valuation is a cornerstone. In the ever-evolving landscape of startups, pre-money valuation will continue to play a pivotal role. As new technologies emerge and market dynamics shift, the need for accurate and reliable valuation will only become more pronounced. Startups that embrace transparency, engage in thorough due diligence, and seek guidance from experienced partners like FFA Ventures will be best positioned for success. By fostering a culture of collaboration and open dialogue, we can ensure that pre-money valuation serves its intended purpose as a catalyst for innovation, growth, and the realization of entrepreneurial dreams. Let's work together to build a thriving startup ecosystem where accurate valuation is not just a goal, but the foundation upon which success is built. As we conclude our journey through the intricacies of pre-money valuation, it's essential to recognize the importance of having the right partners by your side. FFA Ventures is dedicated to empowering startups with the tools, knowledge, and support they need to navigate the complex world of valuation. Our commitment to transparency, innovation, and growth ensures that your venture is set on a path to success. Whether you're just starting out or looking to scale, FFA Ventures stands ready to guide you every step of the way. Together, we can build a future where accurate valuation is the cornerstone of thriving businesses and groundbreaking innovations. Thank you for joining us. Let's continue to shape the future of the startup ecosystem, one valuation at a time.